All right, guys. Hey, Vinny's back with my great friend James Kandasamy is here. And remember, I hope you're liking all the things that I'm putting out for you. And remember my two shows, live shows, which goes 15 channels now live at the same time. Abundance Mindset with Vinney Chopra, with myself and Walter Amarillo, great friend. And everybody, that's on Thursday, 9 a.m. Pacific, because I live near San Francisco. And Friday, Vinny and Bo show, 9 a.m. We changed the time also to 9 and 9 so that you remember it best. And please like and share and join me there. We talk about so many great things in those two shows. Then in the podcast, if anybody who has not gotten the book yet, please go ahead and go to apartmentsyndicationmadeeasy.com. Very simple. Apartmentsyndicationmadeeasy.com. You'll get a free book, digital copy, and audio copy. And you will get audio and the digital of my second book, Positivity Brings Profitability, also. So it's going to be exciting. And then my third book is coming, almost coming. I've written it. It's taken me longer to really, I want to put the best of senior living with the silver tsunami coming up. So look forward to getting that one. James, thank you for coming on the show, brother.
I'm super happy to, come back to your show and talk to you and connect and, just have a coffee chat, I guess.
I know. This is the fun part. I'm here in San Francisco, you're in Austin, and, we have known each other, and I really value what you're bringing to the, your investors, to all the people around you, and congratulations.
Kudos. Oh, yeah. And thanks for you for bringing all the values to your investors and the community as well.
No, thank you. And, we were just discussing before the show how savvy syndicators have sold a lot of their stuff at the peak. And that is the real key to success, investing for the passive investor, to make sure they get their money back and the returns and everything. And then they are ready to put it again into the new deals with 2023. Maybe we'll start with that. There is a big shift coming, isn't it? So it will be a big opportunity to invest in commercial again. Yeah.
Absolutely. So let me address one thing about, my thought process on why I sell and why I keep my real estate, right? So when I started in this business, when we buy apartments, we were getting like 7, 8, 9, 10% cash on cash. And there's always a question, why not you just keep the asset? Why are we talking about business plan, 3 years, 5 years? I always talk to myself, why are we talking about 3 to 5 year holding? You can hold it forever, right? And because it's very hard to get 8, 9% with tax benefit and all that, right? Yes. So when I started, I always have that mindset that we should keep our property forever, right? For a long time, right? Mm-hmm. And after some time, I realized, hey, markets goes on cycles, right? And I start reading books.
Yes.
On Howard Marks, mastering the market cycle, and a lot of other market cycle books, and some of the webinars that I do, some of the podcast guests I bring here, economists, right? They talk about market cycle, and they talk about how the prices goes up and down in real estate, even though the low of the next cycle low is always higher. It always goes up, right? Rather than goes down, right?
Yep.
So, but if one savvy syndicator or investor are able to play that market cycle, you'll make a lot more money compared to just keeping it forever a long time, right?
Yes.
So,
yes.
So that's why, in 2023, after reading Howard Marks' book, where he said, when people think that nothing is going to go down, people think buy everything, right? When multifamily, right? When he said, if you go to NMHC last year, 2022, it happens in January, right? So, and the conclusion of the NMHC was buy everything you can. That's the message for me to say that now is the time to sell.
I bought only one last year, brother. You're so right. I sold maybe 5 or so.
Yeah, exactly. 6. So that was a signal, right? When people always say when your barbers start talking about house flipping and all that, you should sell. That's the same concept. When everybody said, when the mood of the people are so positive on one asset, that's the time to sell, right? I still have half of my portfolio, which is I bought the second part of my career, which is still have a lot of upside. I'm still keeping it. It's still good. We are doing very well, and has an upside on it, and it's potential to grow. But the one that I started in the beginning, where I think the upside has been taken care of, and I was ready to sell, so I went and sold it. So it was a good timing. I know hindsight 2020, we said we made the best decision, but I had that hunch of, markets high. A lot of my property was in San Antonio, San Antonio. Cap rate was compressing like crazy at that time, right? First it was Dallas and Austin, and everybody was going to San Antonio because prices were compressing. So I started selling.
Very nice.
And it was a good timing, I guess, right? So
Excellent. No, that's great. And talking to the passive investors and other people, I mean, I hope you're ready. I know a lot of people have lost money in the stock market. You and I have too. I mean, what we gained in 21, it was a great year in stock market. 22 went down, and some people leveled off and all. But real estate is such a thing which you and I love, and diversifying.
Even on real estate and crypto, I had a lot of friends who were heavily into stock, and I told them, "Hey, it's the time to sell." Last year, it's the time to sell because it's going up like crazy. It's time to sell, and they were like, "I mean, of course, it's a human psychology, right? And that's how markets work. When things are really good, people think that it's never going to come down, right?
Yeah, never.
Fear
but
and
everything that goes up comes down. Newton's law.
I know exactly. So, and also, just the psychology of market where everybody thinks things are so good. It may not be so good, right? So like right now, if you look at it, interest rates going up like crazy. People are thinking it's not the best time to buy. Let's just pencils down and all that. But this is the best time to really start looking at deals.
Sure, true,
right?
true. You hit the nail on the head right now, because you and I were buying, brother, at 7% interest rate and 6%. The pricing was structured that way so that it made sense, and it has to also do it now too. No, definitely. So, what would be the how could we tell a passive investor, James, in your estimation, why this is the best time, 2023?
I think we should definitely tell them that, hey, this is the best time, because a lot of syndicators who, for the past few years, everybody bought using bridge loans, right?
Yes.
So keep in mind the reason why people use bridge loan, and I explained this in my book, right? And which was written like 2-3 years ago.
Yes, nice book, by the way. And people should really get James' book, like my book and all. You get knowledge. You get so much good stuff. Yeah.
Yes, I talked about 2 different types of loan products, right? One is the agency loan, and the other types of loan is where the bridge loan or CMBS loan. And I said, in that book, bridge loan and CMBS is not the best loan to get, but there's a place for it to buy. Yeah. You're buying a value add deal with a lot of value add, then you go and use a bridge loan, right? Whereas if a stabilized deal, then you go and use agency loan, right? And agency loan is a lot more safer, but of course there's a yield maintenance penalty and all that, right? So, but I think what happened in 2020 onwards, everybody was buying using bridge loan because all the value has gone up so much. Yeah. So people are not buying using intrinsic value. People are buying future value, right? Yeah. So now bridge loan become dominant, but now we're still in that 3 years period of bridge loan, but the prices didn't continue to go up. Now it started to stagnate, and in fact, start coming down already, right? Prices are down 10, 15, 20% right now in a lot of markets.
Hi, you are listening to Syndication Made Easy podcast. We will be right back after this short break.
Hi, thank you so much. This is Vinney Chopra, and thank you for subscribing to my podcast and YouTube channel and Facebook pages and all the great things, and LinkedIn. Connect with me. I come live to you every Friday at 9 Pacific with Vinney and Bo show. Please also look at that. And also the podcast, which is my Apartment Syndication Made Easy. The book I wrote a couple of years back became international top seller on Amazon International now. And then we like to bring great guests for you every week or twice a week sometime to give you a lot of great knowledge. So please subscribe. You give us 5-star reviews on the iTunes. The better the guests we can bring, and our ranking will go higher also. Thanks again for following us and really getting the most out of it. Please comment, like, share, because we would love to bring better and better material for you.
So it's a good time to really start looking. And even then, I'm trying to structure something that, will be very interesting for this market, right? I mean, rather than just go and buy a deal, because they still got ask and bid spread between buyers and sellers. Sellers still have not let go of their pricing.
Not yet. Not yet.
Yeah.
You're right. Yeah.
So it's a bit hard to find buyers. It's a bit hard to find a good price as well, lower price that matches the interest rate. But at some point, a lot of bridge lenders are going to be losing their line of credit
Yeah.
or their lines of liquidity. In fact, we're already seeing a lot of people are no more liquid. A lot of institutional out of the market, a lot of private equities out of the market because they're no more liquid. Or they said, bring me 5.5% cap rate on a trailing or 6 cap on a trailing T12. Then only I'll start looking into it. So people are giving these kind of conditions to start doing deals. So, and sellers are not there yet. So it's going to come where it's going to be some good deals coming in. And for those who are ready and those who are prepared, you can reap the benefit heavily.
Sure, definitely. Thank you for sharing. Also, I know you're into development. I'm into development also in the multifamily on the assisted living side, which I love. But you're on the multifamily side. Is that right?
Yes, correct. Yeah.
So what have been some good pros and cons or ups and downs?
Yeah, sure.
With labor costs going through the roof, all that stuff.
So I realized that, we teach our students, a lot of people, we teach, multifamily syndication and how to buy deals and all that. But there's a lot of other people also teaching multifamily syndication, right?
Yes.
So what has happened is the market has been overcrowded with people who are trying to do multifamily syndication, right? So when I look at real estate, there's like 7 spectrum in real estate, right? But we're only playing in one spectrum, which is the multifamily value add, or what we call it as redevelopment, right? That's only 1 out of 7 spectrum. So the first spectrum is land banking. The second spectrum is land buying, doing land entitlement. Third is land development. Middle is land redevelopment, which is value add, and there's another one where we reposition the land, the value add construction structure on it, and the last one is we demolish and we do a new asset class completely, right? So I've realized if you want to play all the time in the market, you have to use this 7 spectrum. Not only 7. I like to use only 3 spectrum, which is starting from buying a land and until value add. So it's like 4 spectrum. I say this is the fastest way to make money because things go much more quicker, right? In land banking, the first spectrum, that's like 10, 15 years. You sit on land. It's too boring for me, but there are people doing it. They're very successful, good for them. But we will be active people. We want to, buy a deal, buy a land and start doing entitlement and start building, right? So because we want to make sure our investors are taken care of, right?
Yes.
We can't have investors sitting for 10, 15 years.
No. Maybe 3 years maximum. Maybe 3 years.
Yeah. So we want to do entitlement and development. So I realized it's more risky, right, when you do construction. But if you know what you're doing, and if you're able to do a lot with your money in the beginning itself, you reduce a lot of risk for the investors. So I start looking into construction because the value upside is huge, right? If you buy for land banking, you're probably buying at maybe 50 cents dollar per square feet, right, per our land, right? But when you go to multifamily, it's like maybe like once you start building it, it's like maybe one like 700,000 per square feet land, right? So how do you start from beginning, and how do you start from beginning part of the spectrum, and how do you go up is where you create that value add. So because when you do construction, it's 100% value add, right? So but to reduce risk for the investor, a lot of times I use my own money in the beginning so that the investors are not.
Same thing with me, totally. Yeah, my partner and I, we lock in the land, brother, and then we do all the changes of ordinances, all expenses, all the plans, just like Robin, you do.
Yeah, absolutely.
And once we are ready to put shovel in the ground, we raise the money, right?
Correct. Then only investors come in. So that reduces a lot of risk.
Risk,
we also bring investors early on the game, but we give them a lot more compensation, right?
I see. Okay, good. Because they're the ugly ones. And then do you do then raising? This is a good question. Twice then? You do a little bit for the land acquisition and the phase, and then you do again another syndication, or how do you?
Yeah, so we structure our deal. Whenever we start from land, we do 3 phases. Phase 1 is where we say buying the land, which is the highest risk and also high compensation, right?
Yeah.
We gave them 25% or 22%, 23% pref return, which is huge, right? But it's a lot more risky. But And then we do phase 2. Once the entitlement is done, that's where we started once we start construction. So that's a slightly lower return, but lower risk too, right? So, and phase 3 is once we already build it, we start cash flowing. That's where the phase 3 comes in. So we go by phases so that people can choose where do they want to go, because every one of these phases has risk to it, right? So, so that's how we have been structuring it, and I think there's a lot of value in the land development up to construction and building it, because you're creating that much value, right? Especially now, right? It's very hard to buy a deal. Yeah, right? Interest rate is so high. I mean, and prices have not come down. How are you going to buy a deal? But you can buy a land and get it entitled.
So true.
Because entitlement takes like 1 or 2 years, right?
Yeah.
1.5 years. So. The banks are not involved, right? You are involved. I mean, unless you close on the land, right? If you don't close on the land, you are basically sitting on the land doing entitlement work while putting under contract, and you're creating that value without the banks are not involved. Yeah. So that's a huge value creation that we are trying to do, and we have been doing this in our development. So we did our first ground up construction multifamily, which took us 2 years to do land entitlement, zoning, finding the utilities, and it took us 2 years, and we recently started, building up
construction. Okay.
Construction. We started moving dirt. So it's almost a $80 million project that we are doing right now in San Antonio, 324 units. And it's crazy, right? To think about it. Our first development itself is an $80 million deal, right? So,
oh my gosh, really?
Yeah, it's a big project, but I took a lot of risk on it, right? So
that's something. This is so good what you're talking about right now. If it's okay, I don't know. I've never done it, but I'm going to open up a little video. We might even play that if that works. If this is the right video. And there we go. We are into land development. This will be very different. Everybody listening to us, you got to watch us, this one. And James, I would love to show you, brother. This is amazing. And there we go. This is my desktop. And we'll go here. It's recording right now. And that's here right there. And this is over here. So we show you guys what we do in construction. I mean, this is a whole show that, my brother James is talking about. So this is how we do it.
Oh, good. So you go by weekly updates, I guess, right?
Yeah, we do like that. Monthly updates, through the drone and everything for our investors. So that's our brand, Hampton Manor, which everybody can see it. So in 3 months, we are done this much for our construction site. And then we try to put the shells. We can do the skirts going and everything as quickly as possible. Then we start building inside.
So how long does it take from beginning to at least?
About 12 months. 12 months.
Very quick, yeah.
Yeah, very quick, because time is money. So we try to get all the contractors all planned out. We've been using the same ones again and again because we cookie cutter it, right? Same thing, we're going to put it here, there. We've done it 33 times so far, So every time we are improving the quality of our buildings, but they look the same.
Got it.
You might appreciate that. I thought.
Yeah, that's a lot of time saving, right, in design. Because design takes at least, in big multifamily, it takes like 6 months for design.
It does, doesn't it? For sure. And then, it cost involved, right? But once we are able to tweak it here and there a little bit, exterior, interior, like Williamsburg, Virginia, I'm building it, and this one is another place, then Palm City, and over there in Florida at 5 locations, things like that. So just to give you an idea to our audience, look at that. Baby's born in 9 months.
Wow, that's cool.
And it's always one story because we want the seniors to really enjoy 7 acres of land, usually 6 to 7 acres of land. And we build high ceilings, everything. Of course, look at the bathrooms, big spacious bathrooms, and the curved inside. So it gives a feeling of their home, actually. Yeah. It's an apartment complex, by the way. It is total apartment complex with sunrooms, with, dining halls, everything, plus the billiard rooms. And it is the memory care side. We will build it on the one side of our building is always memory care. I thought, hey, this is it. I'm going to stop this year, come back to it. But let me go back and, stop it. Okay, there we go. Sorry about that.
Good that you created a system, right? To create same structures all the time, right?
All the time, same, that's the beauty of it, because that way we don't have to employ a lot of architectures because we have the blueprint. And when we go for our ordinance changes and everything, it's very simple for us because we can do all these renditions, Good.
Yeah, it's very, as I said, multifamily syndication, buying existing asset is very difficult now because the rates are high, the price have not come down. Sellers are not selling it at a discount yet.
Yes.
The cap rate is gone up, but just it's so difficult to buy anything that makes sense. For me, and I believe for you, we all engineers, I guess, right? We all talk about risk, right? What is the risk here, right? Do I take that risk or no, right? So we rather not take the risk. So it's all about how much buffer you have between, what's the upside you have. If you don't have upside, you don't touch it, right? And you get that upside in construction.
Yeah, that is huge. And that's what I'm finding,
So that's protect our investors. Then that's very important.
Very, very important. Very important. And to be with the right operators, because the key thing is the track record is so, like you have track, I have track with my partner, everything, because some people can go haywire. This can also blow up on their face too, by the way. Construction going 30% higher, not able to get financing or things. And then time factor of money is so important in development. You're right.
Yeah, that's true. Construction do come with a lot of risk, right? So some of the risk I manage, we have a GMP pricing, guaranteed max pricing that we put in. And we fixed our interest rate. So some of the things that key ones I did, fix it so that we don't have problem. I'm sure there's other problems that's going to come, but we will see the main variables have been taken care of.
Very nice. Very nice. I'd love to ask you, James, we could talk again. So much more to bring out to the, investors. What kind of couple of books are you reading, or they are really impactful right now in your?
The last book I read was all about market cycle. That was important. Recently, what books? Recently not much of books, but I think the last books which I read was more of market cycle, where, usually by Howard Marks. Yeah, Howard Marks is he's the CEO of Oaktree, which is one of the largest hedge fund for real estate in the world. They do more on the credit side. They're very successful, right? And Howard Marks is a guy, whenever he sent out newsletter, Warren Buffett said the first email he opens is Howard Marks email, because
look at that. Wow.
That's one book I would recommend that, your
audience. Yeah.
Audience, right. So, and I launched my latest book called
Please, how can people reach you? Tell me all about it. Yeah.
So it's a book for doctors. You work hard, make sure your money works harder for you. And it's basically books for doctors. It's in Amazon right now. And the reason I wrote a book for doctors is basically a lot of times doctors, they got bombarded with so much advertising, so much of solicitation for buying something, right? Invest in this. So they put a big wall around them, right? So to penetrate this syndication, this commercial real estate knowledge to them, I said, hey, I'm going to write a third party, a book which they can, as a third party, and they can pick it up and they can read, or they don't want to do it, right? But nobody's pitching to them, right? So that's my second book that I recently launched.
Nice.
First book, which is Passive Investing in Commercial Real Estate.
Very nice book. Yeah, no, I would like everybody to, please go Amazon, James Kandasamy, please pick up. I'm going to pick up your second one. I'll go.
Cool.
I love to listen. So Audible, probably there is in the Audible.
Yeah, we are going to be launching Audible. It's already
Soon. Okay.
not launched yet, but it's going to be launching soon. I'm Audible guy too. I like Audible.
I love it. I love it. Yeah. How about any apps or something that you are really finding useful in your business this juncture in time?
I would say vb.ly is an app where I use for my social media whenever I do my videos.
Okay.
To you can put a caption on your video just on your phone.
Oh,
so
wow.
Auto translate your words into captions.
Oh, really? What's the name?
Vme.ly.
Vinney.
VEME.ly.
Oh,
so it's like $9 per month or what, right? It's very cheap.
Very, very cheap, brother. Yeah.
Every time I go somewhere, I just take a video. And whenever I have time in the airport, I transcribe it using that app and I can launch it immediately.
How do you spell it for audience? If you don't...
VE.
VE.
VEME.
ME.
.ly.
.ly. Vimmy.ly. Love it, brother. No, thank you. So it transcribes everything from audio or video,
from the video
words
to caption on your video. Because a lot of times, if you see 80% of the video on social media, nobody really turn on the sound, right? We don't have time.
Yeah.
We don't mind reading the captions, right? We don't mind reading the caption down there. Right? So that helps to create my videos on a caption. And I'm sure you go to my YouTube channel, you'll see a lot of videos with captions.
Love it.
People, as I said, 80% of the people in social media don't really turn on videos, sound.
Yeah.
To really listen to it. They just listen to the picture and they see the caption, they read it. So that's a good way for you to, communicate your message through social media.
Yes. No, wonderful. No, thank you, James, for coming and hanging out with me, have a chat, and appreciate everything that you are doing, and kudos to you and everything, and look forward to meeting you. I'm right there also. Yeah. Yes. Thanks again, everybody, for liking the show, subscribing to us, and also sharing. Please share this episode with one more person which can really bring value to them. And thanks for joining, and we'll see you next time. Thank you again, for joining Vinney Chopra this week on this podcast. And please subscribe, share, give comments, and give 5-star rating if you can on iTunes, because that really helps a lot for us to bring great guests. And also iTunes raises our rankings up. And I hope you have been very happy with Vinney Chopra and team, who are able to bring great information. If you would like to invest with us, please go ahead and go to vinneychopra.com/invest. Thanks again. God bless you.